Embassy Reit, actually, let's talk about that one, which is the first such structure to get listed in India. The trust now manages only commercial properties and came out with their earnings for the first time since its listing. Sharad Dubey caught up with Mike Holland, CEO of Embassy Reit, and started off by asking him on the distribution yield. Here's what he had to say. Listen in.
The board approved earlier this week a distribution of 417 crores. That equates to 5.4 rupees per unit. In our offer document back in March, at the offer price, that equated to an 8.25% yield. Clearly, with our unit price rising over the last quarter by 22%, that we're on track in terms of the total quantum of distribution for the year, which we said was 1910 crores. But clearly that yield has come in with that 22% rise in the unit value. A couple of things going back to the regulatory thing, that we're going one further than the SEBI requirements. SEBI say that we must, as a REIT, give distributions once every 6 months minimum. So we've gone further. We're doing a quarterly distribution. And the second piece is SEBI REIT regulations require that we distribute at least 90% of available cash flows. We've gone significantly further than that. This quarter we're distributing 99.7% of NDCF. So the unit holder, the investor, can feel confident that they will receive that quarterly distribution on a regular basis, because it's backed by 75 buildings, 11 assets across the country, and managed by
Mike, I would just like to ask one more thing. Yeah. Is the operational aspect, going into this June quarter, what were the operational numbers looking like this time?
So, the appeal of the business is that it's a highly predictable cash flow from the contracts that we have with those 160 plus tenants. All of our numbers were in the offer document. We're tracking to that. We're on track, and we don't manage the business quarter by quarter, but we do look at the whole year, and we're in great shape. I think there's clearly a lot of noise in the market around two big issues, liquidity and the NBFC situation, and the residential sector is going through difficult times, as it has for a little time now. Neither of those issues impacts us. We have no residential whatsoever in the portfolio, and there's no. In fact, the regs don't allow us to do development, so it's not part of our business plan. In terms of our debt levels, we have an 11% net debt to TEV position, which means we're nicely placed in the event that there are any acquisition opportunities, which we can take through either through debt or issuing fresh units. So we've got maximum flexibility for that growth through acquisitions, and a lot of the market noise and the negative sentiment that's out there. On the converse, we're seeing our occupiers are telling us that they want to grow. So last quarter we leased 595,000 square feet to 15 tenants. We're building 3 new office towers totaling 1.4 million square feet. They're currently tracking 2 quarters ahead of schedule. From an investor perspective, by bringing those buildings forward, the timing of that income from the rent, when we rent them out, comes forward, and that adds to the numbers. So our business is, and has been for some time, is in a comfortable, confident position to deliver to our annual distribution that we charted out, the 1,900 odd crores.
Mike, I would like to ask about the tenants, any anchor tenants which have come up in this quarter, and what pipeline is looking like for you going into FY20.
Yeah. So we're in a super place on that in terms of our industry. Our top tenants include not just technology tenants, companies like Google and Microsoft. We added Facebook with a new lease this last quarter. So not just pure play technology, but also companies who are in the cybersecurity space, companies who are in the banking and finance sector, so blue chips like a JP Morgan or a Wells Fargo or a DBS Bank are tenants with us. Companies like Rolls-Royce, Mercedes-Benz, and so on and so forth. It's a very broad, diverse tenant range. In the last quarter, we're happy to report that we signed a couple of deals with HCL, with Infosys, BPM, and I mentioned Facebook. So that 595,000 square feet is domestic and international tenants, but high quality. We've seen, and I think you can see it in their reporting, but a number of the Indian top tier IT companies have been talking about going to the asset light model. So historically they've built their own campuses. HCL and Infosys would be an example where they're looking at that leasing side, and the hiring stats and reports that have come out are very positive around the additional new headcount, which then feeds through to demand for our type of product.
Yeah, Mike, one more thing is your Embassy Manyata project.
Yep.
That is actually contributing a good chunk of,
Yep.
Contribution to the revenues or the lease, which we say.
Yeah.
So what is the progress and the update of it? And if you can give it, for the viewers, for till FY22 or FY23, how does the progress has, been for this project?
Yeah. So Embassy Manyata is a super asset on the north side of Bangalore. It's a 120-acre business park. There are over 100,000 people working on that park. It runs as close to 100% occupancy consistently as can be. There'll always be maybe in that 10, 11 million square feet, there might be 20,000 square feet available at any one time. I mean, it's 99 plus occupancy. We're on track with a new development at the front of that park where we're adding 2 office towers, each of which is 400,000 square feet, a conferencing facility of 58,000 feet, and 2 new hotels to cater to the users of those parks. The office towers, we're looking to deliver those 2 quarters earlier than projections, so by March of next year. We've already got a great pipeline of tenants, not just at Manyata, but across the portfolio that we're speaking to, over 500,000 square feet of potential tenants. The hotel developments are on track. The reason that we do those hotels in those large parks is it improves the business efficiency for the tenants. We often talk about what we call a total business ecosystem, so that as a tenant, they've got on their doorstep a conferencing centre that they can use. They've got hotels, different price points, as well as all the other things, sports.
Yes, that was a good point, Mike. One more thing, lastly, I'd like to ask you is that Indiabulls Real Estate is actually, they're actually selling their commercial assets and also the residential assets, so that they have the merger with Lakshmi Vilas Bank, so that they actually become a bank. So have you got any interest on this, or is there any progress on talks regarding this?
Yep. So clearly there's been a lot of media coverage about potential sales and discussions about those Indiabulls properties. On acquisitions, first off, I would say we are out in the market looking at acquisitions. The press coverage around Indiabulls has related to conversations that are going on or may be going on between an embassy and a Blackstone. It's not at the stage that it's been a conversation that's been with us at the Reit. You mentioned about residential. We will not have residential in the Reit portfolio. If those assets come up for consideration, we will look at those in the same way as we would look at any independent asset, but that's not the case at present.
Well, Mike, Blackstone is actually having some kind of stake in some certain commercial properties in Indiabulls. So is there any kind of other progress which can be made via Blackstone, since they are also a part of your REIT?
Yeah, so Blackstone are a sponsor and therefore a unit holder in the REIT, along with many other unit holders. If they were to look at an asset and offer it to the REIT, any asset, whoever was offering it to us, we would prefer to own 100% of that asset because there's some tax benefits around that. So that really would be one of our key criteria for any asset that we would look at anywhere in the country and from any party who was offering that.